Hey everyone, welcome back to today's Explainer. Last year alone, literally billions of dollars in new global wealth were generated by people who were, well, fast asleep. No joke. They weren't chained to a desk, they weren't trading their precious time for an hourly wage, but their net worth just kept climbing. It's a wildly fascinating reality, and today we're going to unpack exactly how that actually happens.
Seriously, ask yourself this. What if your money worked while you slept? Just take a second to imagine that. Sounds like an absolute dream, right? But the wealthy understand this fundamental secret that honestly most of the world just completely misses. They get that money is supposed to be a tool that works tirelessly for you, not a master that you work for. It just takes this massive shift in how you view your time, your energy, and your capital.
Okay, let's dive right into this. Here's our roadmap for demystifying these proven strategies today. We'll cover the passive income reality, traditional market investing, the digital wealth era, the AI business boom, and finally, the master wealth strategy.
All right, Section 1, the passive income reality. Not a lottery, just leverage.
Right off the bat, we gotta bust a massive myth here. The people earning money around the clock, they are not just lucky lottery winners. They aren't all naturally gifted celebrities, and the vast majority of them absolutely did not inherit some massive trust fund. What they actually have is leverage. Passive income basically means putting in the heavy lifting just once and then creating a really smart system that earns repeatedly. It's kind of like, instead of grabbing 2 buckets and hiking to the river every single day to fetch water, you spend a grueling month building a pipeline. Yeah, building the pipeline is hard, unpaid, upfront work. But once it's done, the water just flows straight to your house 24/7. That is what true leverage looks like.
Moving on to Section 2, traditional market investing. Making your money work for you.
Now, what's really interesting about this is that it's essentially where you hire your dollars as dedicated employees. Their one and only job is to go out into the market, recruit more dollars, and bring them right back to your portfolio. There's a pretty stark contrast between the two main approaches here. On one side, you have people desperately trying to beat the market by actively trading individual stocks. It's incredibly stressful, it requires constant monitoring, and historically, it's a losing battle. Studies actually consistently show that over a 15-year period, nearly 90% of actively managed funds fail to beat the market. No way, right? But on the other side, we have index funds. This strategy simply tracks the overall market's growth. It is beautifully passive, remarkably consistent over the long haul, and it honestly serves as the absolute bedrock for the world's most successful, quiet millionaires.
But, okay, let's be pragmatic for a second. I have to remind you of the catch here. Returns are never, ever guaranteed. Investments can and will lose value in the short term. The stock market is an emotional roller coaster, for sure. And while the index fund strategy is incredibly proven over decades, nothing in life is a sure thing. To actually make this strategy work, you have to invest regularly, ignore the panic-inducing daily news cycle, and fully commit to the long-term journey. Consistency really is everything.
Another totally amazing facet of this traditional market category is dividend investing. So some companies literally share a portion of their profits directly with their shareholders, usually on a quarterly basis. And the secret strategy here isn't to take those dividends and blow them on a fancy dinner. No, it's to take those profit payments and immediately reinvest them to buy even more fractions of shares. Picture a snowball rolling down a really long snow-covered hill. At first, it barely gathers anything. But as it gets bigger, its surface area grows and it starts packing on massive amounts of snow with every single rotation. Reinvesting your dividends creates that exact same unstoppable financial momentum.
So the crucial point we have to remember here is that patience is the real superpower. During those first 5 to 10 years of investing, the vast majority of your portfolio's growth is honestly just your own hard-earned money being deposited. It feels super slow, but if you hold on, something magical happens. Usually right around year 15 or 20, the compounding growth, so those reinvested dividends and market returns, actually begins to overtake your initial contributions. Literally, your money starts making more money than you do. It takes years to reach that tipping point, which makes patience your absolute greatest asset.
Which brings us to Section 3, the digital wealth era, making your time and content work for you.
We are living in a truly unprecedented era because it allows everyday creators to build highly scalable digital businesses with virtually zero startup costs. Just think about ebooks, online courses, printable planners, or digital templates. Imagine a creator who spends 3 intensive weekends designing a really comprehensive digital budgeting template for freelancers. They do the hard work once, then they upload it to an online store, and over the next 2 years, they sell that exact same file 5,000 times to people all over the globe. There are no shipping fees, no factory delays, no inventory limits to worry about.
The profit margins are enormous, and the income is fully decoupled from their daily time.
Then we have the incredible mechanism of YouTube automation. Now, when most people think of a YouTube creator, they picture a vlogger holding a camera all day. But there is this massive industry of educational channels in niches like finance, history, and science, where the creator literally never shows their face. These creators operate a lot more like digital producers. They hire scriptwriters and voice artists, or even leverage software, to craft really engaging documentaries or explainers. A well-made evergreen video about, say, the history of ancient Rome. That isn't just a fun project, it's a piece of digital real estate. It can just sit on the platform, attract viewers, and collect ad revenue every single day for half a decade.
Another brilliant avenue in this space is affiliate marketing, which is just earning a commission by recommending products or services that you genuinely believe in. Now look, we've all seen that one distant relative on social media aggressively pushing some shady energy drink or a miracle supplement. That is terrible, spammy marketing, and it just doesn't last. The most successful affiliate marketers take the exact opposite approach. They might create a blog post or a guide detailing exactly how to solve a specific problem, like, say, reviewing a mattress they personally sleep on to help cure back pain. By providing genuine value and solving real problems, they build deep trust, and then, when their audience happily clicks their unique link to buy the solution, the creator gets a passive cut of the sale.
Let's move to and see how this builds into Section 4, the AI business boom, making technology work for you.
Artificial intelligence is creating entirely new business opportunities every single year, and it is acting as a massive multiplier for passive wealth. And let's be clear, it's not about replacing humans, it's about giving a single person the operational power of a 10-person agency. Entrepreneurs are actively earning by leveraging AI for content writing, mass-producing highly researched blogs and articles in a fraction of the time. They use AI video editing tools to supercharge those automation channels we just talked about. Graphic design software is allowing non-artists to create stunning digital assets, and intelligent automation solutions are literally being sold to local businesses right now to run their customer service chatbots and workflows. Learning exactly how to pilot these tools today gives you a highly monetizable, totally scalable advantage for tomorrow.
All right, finally, Section 5, the Master Wealth Strategy, bringing it all together.
We've explored the stock market, digital products, content creation, and AI. And this brilliantly illustrates the final, ultimate secret that truly wealthy people use to construct impenetrable financial freedom. Wealthy people do not rely on a single source of income. Just imagine a diversified portfolio where your traditional 9-to-5 salary makes up only 20% of your earnings. The rest of it is heavily supported by your stock market investments at 25%, sales from your digital products at 20%, ad revenue from YouTube sitting at 15%, affiliate marketing at 10%, and maybe some rental income rounding out that final 10%. By weaving together multiple independent income streams, you essentially build a financial fortress. If the economy shifts and, say, your affiliate marketing takes a dip one month, the other streams just effortlessly carry the weight.
So what does this actually mean for your tomorrow morning? How do you even begin to synthesize all of this? Well, building wealth is not a sprint. It's a marathon of smart, repeated decisions. Start incredibly small. Just buy your first index fund or sketch out the outline for your first digital template. Commit to learning continuously as markets and technologies evolve. Always invest in yourself and your skills first, because nobody can tax or take away your knowledge. And finally, you kind of just have to get out of your own way and let compound growth do the heavy lifting over the long haul.
So, I'll leave you with this. Which passive income strategy would you start with first? The wealthy don't just trade time for money. They build machines that trade value for money. Remember, the absolute best time to plant a tree was 20 years ago. But the second best time, that's today. Take that first step, plant your tree, and make your money work for you.